Hello folks, welcome back. This is Karis Trading Institute, and in today's episode I still want to give you an update on the dollar index and foreign currencies. If you are a new viewer, kindly click the subscription button. Don't forget, hit the notification bell so you stay updated every time I post a video. This is the dollar index weekly chart, and it looks like we are in the beginning of a new run to rebalance a sell side imbalance and a buy side inefficiency. What do I mean? Look at this, price took out this low and we have been seeing a rejection to the upside since price took out that low. So it looks like we are retracing into this sell side imbalance and buy side inefficiency of the weekly time frame. Okay, and if you use your Fibonacci to measure this immediate weekly range between the swing low to the swing high, you will notice price is actually in a deep discount, and this is a mitigation block. Price is in a deep discount and price has swept an old low, and so we are expecting that price is going to retrace into this sell side imbalance and the buy side inefficiency. So that's what I'm expecting. On the daily time frame, we are seeing price forming a swing low. Currently price has already formed a swing low. This fourth candle is going to confirm whether this swing low that has been formed is going to hold, and we are going to trade into this low resistance liquidity run. How do you identify a low resistance liquidity run? It's usually when you see a price action that looks like this, or it's usually called a diagonal liquidity. Okay, this is what it means. You have one high, you have another high, and you have the third high. So once you have highs formed in that manner or lows formed in that manner, it is called low resistance liquidity run, because there is liquidity residing above this thing that looks like a trend line. Okay, this is 1, this is 2, this is 3. Let me identify it for you. You have one here, you have another here, and you have another here. When you put your trend line, you're going to see that this looks like a trend line. So usually the institutions would like to run the liquidity residing above this into this sell side imbalance and a buy side inefficiency. Okay, so it looks like our bias truly has changed, and price is finding a support at a breaker block to the left. Okay, this one buy side candle before the sell that was broken to the upside, this is where price is finding support. So let me go to the hourly time frame and let's see what this looks like. Now you can see that we have a valid break of market structure. Price swept liquidity below here. Price broke structure up here. I believe you know how to identify break a market structure. If you haven't watched my video on market structure and shifts of market structure, please go to the channel. I made a video on identifying structure, the right way to identify market structure and shift of market structure. So this is a shift in market structure, or you can call it break in market structure. Okay, so this is a BMS. Sorry, let's label this as BMS. See that, right? We had a BMS, price retraced into it. Forget about this weekly candle, it's actually an induced manipulation, but price actually retraced into another block that has a fair value gap here. So that was what happened, and then we see price expands. Remember, I talked about two types of liquidity. Price usually trades from an internal range liquidity into an external range liquidity. So what are you seeing? Price created an external range liquidity by taking out an old high. Price retraced into an internal range liquidity, which is the fair value gap, another block. Price expands to take out external range liquidity. Price has retraced into an internal range liquidity, and we are still seeing price showing willingness to expand. So where is our next immediate target? The buy side liquidity residing above this external range liquidity is 1. Okay, then this relative equal highs here is your next target. Why? Because there is buy side liquidity residing above this, and then ultimately these old highs, let me remove this. This was the previous volume imbalance that was labeled. The old highs here, the old highs here, all these are what? Buy side liquidity residing above them. So I would like to see price trade into it. And then this is also confluencing with the seasonal tendency for the dollar and foreign currency. Usually in December we like to see a bullish retracement on the dollar and bearish retracement on foreign currencies to cap the year. That is what has been seen in the last 40 years of price action. It's called seasonal tendencies. Okay, 40 years of price action put together to be able to come up with these seasonal tendencies. That in December we like to see bullish retracement and bearish retracement on the foreign currencies. So this is my bias. When I see a 15-minute break of structure, I would like to look for entry, and I think that has already happened. You see that 15 minutes broke structure, price traded into another block, internal liquidity, right? Price is expanding heavily. We like to see it take out this external range liquidity. So this is my bias, guys. Let me analyze GBP USD and possibly Euro USD today to show you what's likely going to unfold on those assets too. So this is the weekly chart of the GBP USD. You can see price actually traded into an institutional order flow entry drill. This has its own criteria. I'm just mentioning it. I didn't really teach it. It has its own criteria. And then I've already outlined these imbalances: the volume imbalance, the buy side imbalance, sell side inefficiency that price should rebalance. So, and I'm seeing price is showing fast rejections and is trading into those levels. Okay, so on the daily time frame, we are seeing something that looks like a smart money reversal. You will see that there has been more of buying and less of selling, more of buys, less of selling, more of buys, less of selling, more of buys, and all of a sudden we are now seeing impulsive sell candles. A swing high has been formed already, and because of this swing high and this fourth candle has already confirmed we are going bearish. Okay, this is the beginning of a sell movement into those weekly levels we outlined. Remember, the higher time frames are the draw on liquidity. That is where the institutions position themselves. The liquidity is residing there, so price is going to trade into those levels. Okay, so I would like to see a retracement to rebalance or into this inefficiency as we continue to the downside. Okay, so on the 1 hour, let me see what is happening on the 1 hour. On the 1 hour, you can see price took out structure, traded into an internal range liquidity, which is the fair value gap here. Price expanded below. Okay, when I see a retracement again, I would like to start selling. So let me go to the 15-minute time frame and see what has happened. You see price broke structure, price retraced into internal range liquidity. Where is the internal range liquidity? Fair value gap. You can see it here, fair value gap, and this is a breaker block. Price traded into it, price expanded. I would like to see price trade into this internal range liquidity, this other block preferably, and I will start going short, okay, or 50% of this entire inefficiency. Let me mark this fair value gap. 50% of this range. Once price trades into it, I would like to continue selling. This is my bias on GBP USD. Let me look at Euro USD as I show you also what we may likely see on the Euro USD. So on the daily time frame, you can see that the Euro USD 2 is showing willingness to rebalance the buy side imbalance and sell side inefficiency and take out this low resistance liquidity run. Remember, I showed you how to identify a low resistance liquidity run. Some people call it diagonal liquidity. Okay, so that's what it is. I like to see price really run into these levels. If you put a trend line, I told you it may form a trend. Okay, this looks like a trend that's going to form. So this is a diagonal liquidity. I would like to see price run into it. Okay, so that's my bias. On the 1 hour here, you can see that price also swept liquidity above, broke structure, traded into internal liquidity. I think the Euro USD is a more favorable foreign currency to trade, okay, today or with what I'm seeing, I think it's a more favorable currency to trade. And then price traded into internal range liquidity, in this case order block. Okay, and we are seeing that fast rejection, guys. We are seeing that fast rejection. You see that confirmation, price broke structure, traded into order block, and it's going down. So guys, this is my bias on the dollar index and foreign currencies. Until next time, I wish you good luck, good trading.